Don't forget to subscribe to the Retire Young podcast. Also, leave us a review on topics you would like us to cover on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on how the institutions, the successful traders, are trading for income. They're utilizing multiple assets. There's other assets out there than just the stock market. There's the futures market, but there's also the Forex market. And Al, as I mentioned at the end of the last segment, we have a lot of listeners that are planning for retirement and then also are retired, but kind of want to be able to, the institutions are always creating income, no matter what they're doing. So people are looking to do the same thing in their retirement. Now, let's talk about the Forex market on how, what the opportunities are with this market, because a lot of people, think these other markets are so volatile and they're scary. They're actually very good markets. Mm-hmm. The Forex market actually moves very, very slow. Right. I mean, there's potentially maybe only 10-cent moves, and that can be potentially in a whole year. So first off, explain what the Forex market is before we get into more on the retirement and the 401ks. What is the Forex market, and why are the institutions, the successful traders, utilizing that for income and retirement?
Well, what we're talking about is the foreign exchange market, commonly called the Forex market, and that trades 24 hours a day. Basically, probably the best leverage, a 50-to-1 leverage. You're looking at the difference in exchange rates between two different currencies. Forex is an unusual asset because it can be used both for short-term, bringing short-term cash in, and it can also be used long-term for your retirement portfolio. And in retirement, one of the problems is that people continue just to utilize what they have used for years when they go into retirement, which means they're still investing in mutual funds, exchange-traded funds, maybe a few stock positions. A lot of people leave their money in their 401ks. Once you retire, once you leave a business or a company for any reason, you have access to that 401k. That is your money. That can be rolled into a self-directed IRA, and we'll talk more about that. But one of the differences when somebody retires between that life and their working life is that the income from the job is gone. That's what was used to pay the bills.
Yeah, when we think about that, once you retire, you're technically unemployed. So that's one of the most important times to have cash flow.
Right, and so for a lot of people, when they do retire, the only, or maybe one of the only things that they have to rely on is what is in their retirement account, maybe their 401k, 403b. But the problem, I think, is one of the reasons we have this crisis is, number one, people aren't putting enough money into those accounts. The returns are not as good as they could be if there were different choices, because the only choices are that one direction kind of choice, a mutual fund, an ETF, exchange-traded fund, or stock, that only participate in one out of three directions that a market can go. It goes up, it goes down, it goes sideways. But all of those that are in a employer-sponsored retirement plan rely on an upward-moving market for any kind of profits to be realized. So people are missing out on two of the three directions the market can go. The institutions, the successful traders are not. They are participating in all three directions, and the public can do the same thing. You just can't do that in your 401k or 403b. Self-directed IRA, you can. Forex can be used, futures can be used, options can be used in a self-directed IRA, so you have many more choices. But one of the big advantages is that you eliminate fees. And those fees, which you are paying someone to really just kind of hold your assets, and then you're making the choices, those fees can take a significant amount away from what you could have when you retire.
Al, I mentioned in the first segment, some of the three C's, and you brought that last one up. It's choices. People want choices. They don't want to be stuck to just mutual funds. And just to go back to the Forex market, everybody has technically probably traded Forex at one point in their life. If they traveled to another country, they sold their dollars for, let's just say, euros if they went over to Europe.
You do an exchange.
Yeah, so that's what the Forex market is, foreign exchange. And, these investing classes that I'm going to give away some tickets to, Al, you teach a lot of these, and you talk a lot about these other assets, what's available, included with the stock market. So there's multiple directions that the market is moving. Investors can take part in those multiple directions, like you were talking about. It's called shorting. Mm-hmm. Shorting is how the investors or the institution, the successful investors, profit in down markets, and there's just multiple opportunities, and you talk a lot about that in these investing classes. Al, you mentioned self-directing a couple times. I just want to make sure our listeners understand what that really means, because a lot of our listeners have 401ks or IRAs that are being managed by a broker or an advisor or maybe a work sponsor, whatever that may be. Now, there's other alternatives that investors can utilize other than mutual funds. You mentioned there's a lot of fees that come along with retirement plans. Well, how can the average investor self-direct, lower fees, and utilize these other alternatives?
Yeah, I think, when you talk about self-directed, a lot of people are going, well, I just don't know that I can do that, take control of my own assets. Well, think about it. If you have a employer-sponsored retirement plan, who is making the decisions as to what you invest in, what changes are made? It really is the individual. It's the employee that is already self-directing their retirement accounts, but with minimal choices, mediocre choices, and still paying somebody else for the privilege of having your money in their plan. But you're already self-directing. So why not look at doing it in a way where there are no fees, and where you have a choice of many different assets? You can you can still trade mutual funds if that's what you want to do. You can trade exchange-traded funds. And by the way, one of the things that we haven't mentioned so far is shorting, which is a way of making money in a downward-moving market. The big players use that on a regular basis. You can't do that in an IRA, but with an exchange-traded fund that is what we call an inverse ETF, that is essentially the same. The end result is going to be about the same as if you were shorting something. And shorting, by the way, is borrowing something you don't own, selling it at the market price, and then having the goal of buying it back to return what you've borrowed at a lower price.
And to simplify that, you're just selling to open and buying to close. It's just an open and a close. That's all it is.
Yeah, you're just doing the opposite of what you would normally do. If you buy something, you buy it to open it at whatever the price is, sell it hopefully at a higher price to get your profit. You're just doing the reverse. You're selling something at a higher price, buying it back at a lower price, and the difference is a profit.
Yeah, now our listeners are probably wondering, well, why would I want to do that? Well, we know the markets have two directions. They go up and they go down. So there's opportunities in up markets. There's opportunities in down markets. There's also opportunities in sideways markets. And
right.
In the next segment, I want you to kind of discuss what options are, because those are a pretty good asset class that institutions, the successful traders, are utilizing in sideways markets.
Perfect asset.
Yeah, so it doesn't matter which way this market goes. You just want it to move. And that's why it's so important, especially in retirement, to have a plan. What are your goals? What do you want your life to look like? And then what type of rules do you need with that? What type of strategy do you need with that? And what can you do to lower fees? Because we didn't get into this yet, but fees compound in a negative way over time. And compounding interest is that's the eighth wonder of the world. So if that's hurting you, that could make a big difference in your retirement plan. So, Al, I want to give away some tickets to this investing class for people that want to understand more about their retirements and retirement planning and retirement strategies that the institutions, the successful traders and investors are utilizing. Al, these segments go by so fast, and we have a lot more to discuss about retirement in this last segment. Now, as I mentioned earlier, I want you to get into options and how to utilize, how institutions, the successful traders and investors are utilizing options especially in retirement accounts, but they're also using those for income too. So there's different opportunities that we have as well, because that's also available to us. This is Josh and Al with the Retire Young Radio Show. We will be right back.